Assalamualaikum and hello everyone. Today, my group and I will present on operating segment under MFRS Act and interim financial reporting under MFRS 134. We have chosen Fraser Neave Holdings Bhd. In this presentation, we will explain how MFRS Act and MFRS 134 are applied in financial reporting, especially in terms of operating segment and interim financial information. Let's begin with the company background. Fraser Neave Holdings Bhd is one of the oldest and well-established food and beverage company in the region. Its brands are widely recognized and commonly found in many households. The company is Sharia compliant and listed on the main board of Bursa Malaysia. It generates more than 5 billion ringgit annually from its main activity, which include producing, marketing, and selling beverage and dairy products. FNHB's operations are divided into several segments. These include Food and Beverage Malaysia, which covers soft and drink and dairy products, Food and Beverage Thailand, as well as property and other businesses. The company operates in several countries such as Malaysia, Brunei, and Thailand, showing its strong regional presence. Some examples of its popular products include 100 Plus, FNN Fun Flavors, FNN Seasons, FNN Ice Mountain, and Oishi. In conclusion, FNHB is a strong and well-known company with diverse business segments and a wide market coverage.
What is MFRS 134? It is a standard that governs the issuance of an interim reporting. It applies to a report that covers the financial reporting period shorter than a full financial year. The Malaysian Accounting Standards Board encourages public traded entities to provide interim financial reports that conform to the recognition, measurement and disclosure principles set out in this standard. Specifically, publicly traded entities are encouraged to provide interim financial reports at least as of the end of the first half of their financial year and to make their interim financial reports available no later than 60 days after the end of the interim period. Interim financial report means a financial report containing either a complete set of financial statements or a set of condensed financial statements for an interim period. To provide a timely and relevant financial information to users, an entity may be required to or may elect to provide less information at interim dates as compared with its annual financial statements. The objective is to improve the ability of investors, creditors, and others to understand an entity's financial condition and liquidity.
There is two significant events and transactions that affect Fraser Neave Holdings Bhd financial position and performance. Firstly, the commencement of a new dairy farm in Malaysia. During the financial year, the group commenced operation of a new dairy farm in Malaysia, marking its first move into upstream dairy production. This required the group to apply an agricultural accounting standard for the first time, resulting in the recognition of buyer asset worth 30.85 million ringgit covering its dairy herd and crops. This is a significant event as it reflects the group's strategy to secure its own raw material supply and support long-term sustainability in its dairy business. The second significant event is the proposed disposal of 50% equity interest in VCS. Near the end of the financial year, the group announced the proposed disposal of its 50% stake in Futrli company SDMBHD, a property development joint venture in Malaysia. Following this announcement, the investment was reclassified as an asset held for sale in the financial statement, affecting how it is presented and measured. This is a significant event as it signals the group's intention to exit non-core activities and potentially redeploy the process towards strengthening its core food and beverage operation. Now, let's discuss and compare the interim report of Fraser Neave Holdings Bhd. For the statement of the financial position, the current period is as at 31st December 2035 compared against 30 September 2035. As per MFRS 134 paragraph 28, the comparative for SOFP must be as of the end of the immediately preceding financial year to enable users to better understand the changes in the entity's financial position since the last annual reporting date. For the remaining statements, which are the statement of profit or loss, statement of comprehensive income, statement of changes in equity, and statement of cash flow, the current period covers 1 October 2025 to 31st December 2025, compared against 1 October 2024 to 1 December 2024. This is to ensure a consistent and comparison performance over the same duration across two different years. Here is the snippet of the statement of financial position from Fraser Neave Holdings Bhd first quarter interim report, the statement of profit or loss, statement of comprehensive income, statement of changes in equity, and last but not least, a statement of cash flows.
MFRS Act requires companies to disclose financial information based on different parts of their business, known as operating segment. These segments are reviewed by the Chief Operating Decision Maker or CODM. First, operating segment refers to a component of a company that earns revenue and incurs expenses and has its own financial information. Next, MFRS Act uses the management approach. This means the segments are reported based on how management view and evaluate the business internally. A segment will be reported if it meets the 10% threshold, such as in revenue, profit or loss, or asset. Companies must disclose important information such as segment revenue, profit or loss, and assets. They also need to reconcile this information with the financial statements. The purpose of MFRS Act is to help users understand the performance of different parts of the business and support better decision making. In conclusion, MFRS Act improves transparency by showing financial information based on how management view the business.
The term Chief Operating Decision Maker identifies a function, not necessarily a manager with a specific title. That function is to allocate resources to and assess the performance of the operating segments of an entity. Often, the Chief Operating Decision Maker of an entity is its Chief Executive Officer or Chief Operating Officer, but it may be a group of executive directors or others. For example, at Fraser Neave Holdings Bhd FNN, Mr. Lim Yu Ho, the Chief Executive Officer and Board of Directors, serve as the CODM of the company.
The two types of segmental reports used in the financial reporting of the company is the business segment and the geographical segment. A business segment is also known as an operating segment. It refers to a component of a company that engages in business activities from which it earns revenues and incurs expenses. Its results are reviewed by the Chief Operating Decision Maker (CODM) for the purpose of resource allocation and performance evaluation. The purpose is to show how different lines of business perform and to help users identify which segments are more profitable or risky. For example, Fraser Neave Holdings Bhd FNN discloses that the group's operating businesses are organized and managed separately according to the nature of activities like beverages, dairies, printing and publishing, and others. Next, a geographical segment divides a company's operations based on location or region, such as countries or continents. The purpose is to show how performance differs across various economic environments, as each region may have different demand, regulations, and risks, such as currency fluctuations and political factors. For example, FNN indicates that the group operates in the following key geographical areas, namely Singapore, Malaysia, Thailand, Vietnam, and other countries. Here is shown the snippet from the annual report for its segmental report.
The first key benefit of segmental reporting is improved performance evaluation. Segmental reporting allows users to assess the profitability and performance of each business segment separately rather than relying on overall aggregate figures. For example, Fraser Neave Holdings Bhd presents its segmental information by operating segments such as beverages, dairies, printing and publishing, and others. Each segment reports its own revenue and profit. This enables users to clearly identify which segments contribute the most to the company's overall performance and which segments may be underperforming. As a result, investors and analysts are able to gain a deeper understanding of the company's strengths and weaknesses. The second key benefit is better decision making. Segmental reporting provides more detailed and relevant information that helps both management and external users make informed decisions, especially in terms of resource allocation. For instance, FNN Holdings Bhd operates in multiple geographical markets such as Malaysia, Singapore, Thailand, and others, which have different economic conditions and growth opportunities. By analyzing the performance of each segment, users can determine which areas have stronger growth potential and deserve more investment. At the same time, management can make strategic decisions such as expanding high-performance segments or improving weaker ones. In conclusion, segmental reporting enhances transparency and provides valuable insight that support better performance, evaluation, and more effective decision-making.